Jim Tisch, let's talk about oil here. What a rally we've seen just in the last couple of weeks. Do you think this is sustainable?
I don't know what oil prices are going to do in the next few weeks. What I can tell you is I strongly believe that oil prices 2 years from now will be 50% higher than where they are currently.
Even with all of the supply on the market? I mean, wasn't that one of the issues?
Because all the supply is going to be used up. Depletion is real. Wells decline in productivity every year. Shale wells particularly quickly. U.S. oil production is down 500,000 barrels a day from the peak. The world is...
So it's already corrected itself.
Yes, the world is dramatically under-investing in new productive capacity. And there's no doubt in my mind that 2 years from now we are going to be short of oil, and oil is going to have to get back to a price where oil producers will have the incentive to drill for more oil. And that number that they need is about $65 a barrel.
Interesting.
Jim, are you worried about any potential bankruptcies or restructurings of some of these companies that can't make money at the current oil price here in the United States?
Sure. Some companies will go bankrupt, but their assets will keep producing. So the question of bankruptcy is simply who's going to be the equity owner of those assets? Will it be the current debt holders, or will it continue to be the equity holders?
Okay, but that's a distressed opportunity potentially over the next 24 months. Is that
yes, I think there will be a number of distressed opportunities.
Jim, I wanted to know about our strength here in the United States with the new technologies and our energy business. Will we maintain that level of strength compared to other foreign producers, despite what we're going through right now with the kind of these distressed companies?
Oh, absolutely. The United States has a resource base unlike any resource base around the world with respect to shale oil. And shale oil is the type of thing that can come on quickly, but it declines quickly as well. So we can see our oil production increase rather dramatically. My guess is that it won't increase as dramatically as it did in 11, 12, 13, and 14, when it increased by about 1 million barrels a day. And the reason for that is that these shale companies were dramatically outspending their cash flow. And that's the creditors aren't going to let that happen again. They're not going to throw the money at it the way they did.
Why were they doing that?
Yeah,
I'm sorry, I'm just curious. Why were they doing that?
Zero interest rates?
Yeah, there you go.
That's zero interest rates.
The animal spirits of exploration.
Yes,
the implications of zero interest rates are...
Yeah, so you see what happened is they stretched the frontier further than they could really accomplish.
That's right. And zero interest rates caused dramatic overinvestment in a lot of industries, specifically in the oil business and the gas business. And for the life of me, I don't understand why the Fed keeps interest rates at 0%.
So you want them to raise rates?
Yes,
when?
because it causes a misallocation of capital, and they're trying to fight inflation, but with lower. They want to increase inflation with lower interest rates, but the reality is those lower interest rates are causing business to invest in more capacity, which leads to lower inflation.
So real quick on the demand side of this story, in terms of the broad economy, how do you think it looks? It looks good? You must think that rate increases are justified.
For the past 6 years, we've been growing at 2%. My guess is we're going to continue growing at 2%. I think what we're seeing, though, is that core inflation is increasing. The Fed is already behind the ball because we've got close to 2% core inflation, and we've got 1/4 or 0.5% on Fed funds. That needs to go up dramatically.
All right, we will leave it there. Jim, it's always great to talk with you. Thanks so much. Jim Tisch, CEO at Loews. We'll be right back.